So this is a pretty good crowd tonight. Hello, everybody.
Hello.
Oh, that's pretty quiet. Come on, give us a big Chiang Mai hello. So disclaimer first. I'm not a licensed attorney, accountant, financial advisor, unicorn, or congressman. This event will be recorded. Make your own decisions, do your own research. This is just education. Who the heck am I? My name is Buddy. I've been a real estate investor for several years. I have achieved cash flow equilibrium. For those of you who don't know what that means, I just mean my expenses are lower than my monthly cash flow. That's all that means. You can call it retirement if you want. I'm a little early for that. And so I just want to make sure that you guys understand where I'm coming from. I don't have all the answers in investing in crypto, and I don't think anybody else in here does either. And I come at it from a different perspective than, say, a stockbroker would or a tech enthusiast would. And so I just want you to keep that in mind as we go through tonight. And I started this event mostly for networking and maybe giving like roundtable presentations or masterminds. But as you can see, there's a lot of people in the room. And to have kind of that roundtable discussion just didn't really work. So we changed to a more presentation style of doing things. But I think it's really important that you guys look around you and meet these people. There you go, good job. I'm serious though, because if you go online, you're going to get a lot of mixed advice, and you're not going to know where it's coming from. You're not going to know what is this person's perspective, what is this person's experience level, where is this person in relation to like investment level and my level. And so it's really hard to trust the advice that you're getting. And if you're new, you're like a sponge. You're just taking it all in. I implore you to meet the people around you so that you can kind of understand their perspective. And then you can kind of filter it and put together your own strategies and your own information. So that's why I think it's really important. And I didn't invent this idea. I got this from real estate. When I got started in real estate, we had what's called real estate investor associations. It's a nationwide associations, just groups that meet up before meetups were called meetups, once a month in your neighborhood, and they would talk about investing specifically in your neighborhood, the laws in your city, your county, your state, which is very important when you're doing real estate investing, because if I get advice from somebody in California, their advice might have absolutely no bearing on my market. You know, Florida, California, Alabama, Texas, Nevada, these are all completely different markets and have their own quirks. So by having these events, we can meet people and find out what's really going on at this level, their level, and stuff like that. You're going to get way more information talking to each other than you will from any presentation. So I encourage you to network. So tonight I wanted to make sure, let me ask you a few questions before we get to this. Who here is their first time coming out tonight? Please raise your hands. Don't be shy. That's about 30, maybe 40% of the room, I'm guessing. Who here has never invested in any crypto yet? Okay, that's perfect, thank you. Last week we had a lot of people come in, and I was guessing about 50-60% of them have never bought a single crypto before. Not Bitcoin, not Ethereum, not anything. And so I kind of wanted to tailor this class and kind of get you up to speed as quickly as possible. So for those of you who are new, I'll give you a couple websites that you want to maybe write down and go visit. You don't have to use these. These are just examples. So for those who have never bought any crypto, if you're going to start trading on it, you're going to want to end up on an exchange like Binance, Bittrex, Poloniex, and we'll talk about which ones you need to actually be on. But in order to get there, to be able to start trading there, you're not going to be able to necessarily hook up your bank account and send cash over. So what you're going to need is some way to get your fiat, that's what we call cash for those who do crypto. You're going to need to get your fiat into crypto first, and you do that with one of these sites, GDAX, also known as Coinbase, okay, CoinMama, Uphold, and there's a Chiang Mai one as well. I think it's a physical place where you can go to. Does anybody remember the domain name? Because I actually don't use it.
You can go to Cube 7. They have the ATM. Right.
They also have the ATM at Cube 7. So you can take your bot. Is it bot or dollars?
Baht, dollars.
It does both?
Yeah.
Awesome. So you can take your dollars or your baht to Cube 7, which is on Soy 7 on Neiman Road, off of Neiman Road, and you can get your fiat into Bitcoin there. You will probably need a Bitcoin address first. Okay? So these sites are not wallets. These are exchanges. They'll have sort of a wallet there that you could send Bitcoin from another address, but that then goes to their pool and is then part of an internal ledger, so it's not quite the same. I know I confused you if you're new to that. Just know that this is an exchange that you can hook up your bank account to, you can send funds to it, and then from there you can buy or do other things with your crypto on the internet, including exchanges. I use Binance a lot. You don't have to join this one. There's tons of them, Poloniex, Bittrex, Bitfinex. You can test all of them and see which one you like the best. I like this one because it has a lot of coins. It doesn't have a lot of features though. So if you want a lot of trailing orders, stop loss orders, these types of things, Binance is not so good for that. But they list a lot of coins and have good volume. Now, kind of skipping ahead a little bit, but let's say you wanted a coin specifically, and you already go to Coinbase or GDAX, and you turned your fiat into Bitcoin, and you want to know where can I go buy, for example, and I'm just picking this at random, Stratus. You're going to go to coinmarketcap.com. We use this site all the time. And this lists all the markets that are trading that coin. You find the coin, go from charts, that'll show you the price and the chart, the history, yada yada. But go to this tab called Markets and scroll down. And now you can find, listed by order of volume, the top markets where you can trade that coin on. So if you wanted Stratus, for example, you would first go to Coinbase.com, hook up your bank account, buy some Bitcoin, and then you would set up an account on one of these, Upbit, Bittrex, Binance, Poloniex, etc., etc. You would send your Bitcoin into your account on that exchange, and then you would trade for that coin there. In a nutshell, that is the basics of how to get started trading in crypto. So moving forward to a little bit more advanced stuff, I wanted to talk about something. Has anybody here done or been part of an ICO? Only this side of the room and that guy. So ICOs are not like IPOs. They use the name for a marketing perspective because they want it to sound like an IPO. And the US SEC is going to jump on that and use it to attack ICOs because they're going to try and create some protections so they can force the ICOs to do their business through banks and with their approval. Because the banks will lose money if these companies can go out and raise funds without having to issue their stock or their bonds through the bank. So I expect that to happen this year. But I wanted to point out that an ICO is not an IPO, and it's not even the same phase of an IPO. If we think of a traditional company before crowdfunding, before the days of crowdfunding, you would have what's called a seed round. That'd be the earliest, riskiest investment. Could be any amount, 10,000, 100,000, 1 million, whatever the company needed just to get to private rounds. Right? So you see seed capital, seed investors do that. The next step up is venture capital. And those can be multiple rounds. Round A, Series A, whatever you want to call it. And then eventually, they want to get listed, and that's their IPO. Getting listed on the New York Stock Exchange or whatever is their big IPO, initial public offering. That's when you, the general public, the non-accredited investors, the person who didn't have a connection with that company or an introduction to that company, you couldn't get into one of these private rounds, but then you buy at the IPO. And I want to point out that the goals for investors is different. If you're a venture capitalist, you're trying to get money while the price is really, really low, and then you want to sell during the IPO, which is when the public is buying. They're buying during the IPO. So while this is a buy event for you, the general public, the non-accredited investors, it's actually the sell event for the big investors. This is the day that they want to sell. Moving forward, we have the same thing, but with crowdfunding. You still have the seed investors, you can have a private round, and now you can do a crowdfund. Everyone here has probably heard of Kickstarter, but there's also websites that you can do equity funds. So when you do Like a crowd fund, you can get a piece of the equity, but they usually limit that. They limit it up to, they can only raise a certain amount, whatever the US law is for that, or the UK law, or wherever the company is being hosted. Then before and after that, you can have more private rounds, and then you finally have your IPO and get listed on an exchange and sell. So I want to talk about how blockchain is just a little bit different, but it's really kind of the same. You still have your seed rounds. Typically, these companies might not require a lot of money. It could just be the team themselves putting in money to start their company and create a blockchain. Some of these companies don't even have a real company. They're just putting out a white paper, having the idea, and then throwing it out there and still raising money. Then they have what's called private sales, and a lot of people haven't even heard of that yet. If you are getting part of the ICO, you are not the first person to buy those coins. There are people ahead of you, possibly weeks or months, who partake of a private sale. And it's called private sale for a very simple reason. They just don't disclose the numbers, and not everyone is invited. Okay? But notice that the ICO is up here, not down here. So blockchain will start with its seed round, then go to private sales, then do an ICO, and then get listed. This listing, major listing, notice I said major exchange listed. Typical companies are only going to get listed on one stock exchange, New York Stock Exchange, whatever it is in Europe.
Crowd sale the same thing as the ICO?
Right, so here I've listed ICO/crowd fund, crowd sale, pretty much the same thing. Now, there's huge opportunities here to be sure. I just want to make sure that everybody knows this is not the first person to buy into these coins. You're actually like the third step along the process. And so if anybody says an ICO is like an IPO, they're kind of wrong. And it's forgivable. But an IPO is getting listed on a major exchange. When I say major exchange, I mean Binance, Bitfinex, the really, really big popular exchanges. If you go through coinmarketcap.com, and you sort where I said markets, you'll see that those tend to float towards the top. Now, I should have put on here, but I don't really need to. There's also what I call fringe exchanges or small exchanges, whatever term you want to use for those. And those are things like HitBTC, EtherDelta, and some other sites. By the way, I know I'm listing off a bunch of sites. If you join our Discord, there is a link to my spreadsheet that has this list of websites and a description for them. So just make sure on that piece of paper you take one with you tonight and you join the link with us and you can get access to my tools and websites. And you don't have to write all this down or remember it. But before you go to a major exchange, there are smaller exchanges. They are riskier, one of which has been either hacked or insider or foobarring, whatever we want to call it. And they've come back, but it's kind of still an unstable site. But those are kind of like the Craigslist of Bitcoins and cryptocurrencies rather than the major exchanges. But it is another opportunity to buy before it reaches sort of an IPO stage. So today, I gave you this sheet. I'm constantly updating this. Again, you'll get access to the updated if you join our group. And I want to go through this because I wrote this for me and then decided to share it because other people could benefit from it. But my terminology could be different than your terminology. So feel free to make your own sheet or just follow along with me as we go through this and I explain it step by step. So obviously the first line, or we're looking on the left-hand side, this is all facts. We don't want any opinions on this side. On the left-hand side, we've got the name and the symbol. Pretty straightforward, although I should point out that there is no regulatory body for these symbols. So if your ICO or coin has CAP, that's actually 3 different coins right now. So make sure that when you go buy them, you're buying the right one on the right exchange. Next up, I want to know what industry, and by the way, I do this every time I fill out one of these sheets before I buy or trade any coin because I want to know as much as I can about it before I start. And that stops me from pulling the trigger too fast and getting a little crazy. but I want to know what type of industry it's in. Is it fintech? Is it medical? Is it insurance? Just generalize what industry it's in. Next, I go to my product description. If you read their white paper, and I suggest you do, you will find that a lot of their descriptions are very fluffy. They've got a lot of verbiage in there. The greatest blah, 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 blah. And you're like, what does it actually even do? So in here, I like to keep it short and sweet. Fintech, market exchange. Fintech, loans to big businesses. I just want a description that I understand that's completely filtered and boiled down. What is their main purpose of business? The next thing I do is I track down the ICO start and end date. And I do that because I want to know how long has it been listed or if it hasn't been listed yet. So I use this sheet and this information even if it's not an ICO. But I want to know when that occurred. Next thing I want to know is the ICO price, because that is public information. Unlike the private sales, can be hard to track down. ICOs typically have a price such as 1 ETH, 1 Bitcoin, $100, $1, some sort of formula for their number of coins. And then they will list a maximum bonus. And it can change depending upon what week you got in or how much you bought or whatever rules they come up with, because it's just whatever they want to do. It's completely unregulated, which I don't mind, but it's whatever rules and terms they come up with. But I want to know, as an investor, what was the maximum bonus? Because I want to figure out what their dollar cost average is, their DCA. Because if I'm buying the coin today for $1 and some other guy was buying it for 10 cents, I want to know that. Because if suddenly the market starts dumping and this coin starts dropping to 90 cents, I want to know how low will these other investors go. Because if they can keep selling all the way down to 10 cents and I'm holding the bag at $1, I want to get out quickly. Meanwhile, if they bought at 80 cents and I bought at 90 cents, I'm not as worried. So this information for me, even though it's in the past, is still relevant to me. I'll wait for the plane. The next thing I want to know is how much did the team and the advisors get? Usually as they go through their ICO process, they'll have a pie chart and they'll show how much the team and how much the advisors got in tokens. This just lets me know how much is not part of the general pool of investors. I want to know who's holding a whole bunch of those, and that gives me an idea on who could be holding large amounts of tokens. Where it says vested, vested means locked up, right? Just like we use the term a lot in San Francisco. If I'm going to go work for a company, I'm going to get equity at that company. How long am I vested for? In other words, when does my stock option actually turn into actual equity? And so we kind of do a similar thing here with ICOs. Sometimes they'll say that the team bonus is vested or locked for 18 months. Sometimes they won't mention it, which means there is no lockup. They could dump their tokens anytime in the market. Now keep this in mind, these rules and numbers only apply if they're honest. There's no one holding them accountable to this, okay? But if they look like a good company and we think they're honest, then we can assume that they actually will keep those tokens locked up for that period of time. Just be aware that if it is a scam, then it's a scam, and whatever they say isn't going to be true anyway. The next up we've got is the trading price. I want to know the day I started looking at this what the price is and what exchange I can buy it on. So I write the exchange and I write the price. When I do that, I want to know the biggest exchange or the exchange that has the most volume. So if it's listed on 5 different exchanges, I don't want to go to the exchange that only traded $1,000 today. I want to go to the exchange that traded $100,000 or $1 million today. Okay? Because that's going to be a more accurate gauge of what the actual price is. The next thing, by the way, a lot of this information you can find right on coinmarketcap.com and ICOrating.com. So it's not that hard to track down, but you should read the white paper. Next thing I want to know is the supply. Now there's 2 parts to that. I should probably change that into 2 questions. There's circulating supply, or you could also call current supply, and then there's total supply. So if we think of Bitcoin, Bitcoin has a circulating supply right now of about 16 million. But it's still part of the proof of work stage, and so it'll go up to eventually 21 million. Will eventually be, I forgot the term, I was going to say minted, but mined. So these tokens will have a similar thing. Now some of them, they've already pre-mined all of it, so you can't do any proof of work or proof of stake, right? Some of them, they're going to release over time, and some of it, it's all released right now. But you as an investor, you need to know that. If you're going to buy a bunch of tokens and they're releasing another 1 million tokens every year, you kind of want to know that. It's important to the price fluctuation. The next thing is they're going to have a hard cap. This is mostly for ICOs, but the hard cap means how many are they allowing themselves to sell during the ICO. It doesn't mean that that much will be sold, because they could get, they could not raise enough funds. If they're trying to raise $10 million and they only sell $9 million worth, then they only sold $9 million worth of tokens. Now, caveat to that, there are some places, some ICOs, that if they sell 9 million, they will burn the other tokens. That means they delete them. They get rid of them so it never reaches the supply market. Some of them they will give out to the customers that bought, and they'll just distribute it kind of evenly depending upon how much you bought. So you kind of get some bonuses if you bought and they didn't raise enough money. Some of them just keep the tokens for themselves. Okay? So you want to know that. And you want to write it down here somewhere in the notes section. What did they do with unsold tokens, or if they sold all of the tokens? Next is I wrote the word dividends. Now, understand, dividends might not be the right term, and if you go looking through their white paper, you might not see the word dividends. But from my perspective, it's kind of the same thing. It's all just cash flow to me, right? I started thinking about this in terms of all the different types of investments that I want to make. I have a cousin who I'm helping him, who's an artist, and I'm going to fund him on his journey, and for that I will get royalties. For stocks, I get dividends. For rental properties, I get rent. For businesses, you get owner's dividends, distributions, and or cash flow. It's all the same, folks. It's all just different words depending upon where it came from. It might have a tax difference, but in terms of real money, real world, there's not a difference. Wait for the plane. This is a big plane. So while I use the word dividends, it's going to look like something else probably. They might use the term airdrop. They might use some other term, some other way that they're going to give people coins for having the coins or for doing something. What I want to know is, can I be a part of that? If I buy 1,000 of these coins, can I stake it and then earn a reward for staking that? To me, that's like a dividend. You can call it whatever you want, but to me, that's like a dividend. And so I write it down in here. The next thing I want to know, and this goes back to the supply, is it inflationary? Are they releasing more tokens or coins over time? Or is that it? Or have we already reached the zenith? Now, there is actually, not a lot of these are doing that anymore, but there's also deflationary. There are companies that buy back a certain amount of tokens or coins every year and burn them and delete them. For me as an investor, that's good. But I don't see that so much. But if you find one of those, make sure you write it down. That's important to know. Down here, this is still related to dividends, but proof of stake, work, and mining. Stuff like Bitcoin and Ethereum have proof of work, and there's other coins that have proof of stake, which like NEO, and that is you can do something to earn more coins. You can either dedicate your computer graphics card to mine more coins, or you can actually use your coins, lock them up, and earn coins for keeping them locked up. If it exists, you just want to make a note of it. Usually that's kind of a good sign, but mostly only currencies do that. Of the currencies, I really only care about, personally, Bitcoin, Ethereum, Dash, and Monero, and sort of Litecoin. If I see a bunch of other coins out there, I want to know how they're better than those 5. But whenever you find it, make sure you write it down. Now, a lot of these coins that are coming onto the market are not as like currencies or infrastructure like Bitcoin and Ethereum. If we really take a step back and look at it, we're investing in micro companies or mid-sized companies sometimes more than we're investing in a coin or technology. So sometimes they're using the blockchain to do something with their company, but what you really are investing in is you're kind of just investing in the company itself. So just keep that in mind as you're going through that. Now, I have a saying, I look for the 3 T's whenever I invest in a new coin especially. I'm looking at the team, the technology, and the tokenomics. If those 3 things are good, there's a good chance this will be a good investment. So over on the right-hand side of the form, you'll see that there's an opinion section. As you're going through the white paper and you're reviewing the company and you're looking at these things, you should write down your score for these. -2 means it's a scam. As soon as you find something that's a scam or a huge red flag, stop wasting your time. There's too many coins. Put this on the shelf and move on. Now, the other things is I just don't want the scores to be terrible if it's a 0, because sometimes it's not applicable to what they're doing. So I created a 0 to 2 to +2 scale. So over here on the right, we have everything from the product strength, which means the industry impact. What is this coin going to do? How impactful to the world or to the industry will it really be? Is it a Facebook and an Amazon, or is it just a little website selling one thing? A few months ago, you could find ICOs that did not have prototypes. They were just papers, literally just white papers. And the team had just gotten started and they didn't have any prototype. Since December and moving forward, more and more of these things should have prototypes. They should have something working on their website. You should download that, try it, check it out, and give it some kind of score. Understand that if it's during the ICO phase, and this is very early, having any kind of really decent working prototype is actually a positive and probably gets a score of +1 or +2. If they're further along and they did their ICO a year ago and their basic prototype doesn't work or it hasn't been updated, that score goes down a lot because they've had time to... Hopefully this is better. Hopefully they've had time to work on that prototype and update it. So it's kind of understanding where they should be in the technology based on the timeline. Then you should look at their competition. You should look at their team and their advisors, and if they're an existing business. Some of these are white papers. Being an existing business is not such a bad thing, so just give it a 0 and move on if it's not part of an existing business. But in terms of safe investing, I would rather invest in an existing business. So I want to make sure I give that a positive score in there. And then you go down. And you can track the team through LinkedIn and other things, but you should really dive into it and spend some time doing that. So you can kind of get the idea of the rest of the paper. By the time I finish this, I have my total score in the top right of my opinions of how I value this company, how strong I think it is as an investment. And then I should have a plan of action. Now I wrote down a blank line for plan of action because it could be anything. You could be missing a very critical idea or component that wasn't in the white paper before you want to invest in this. And so you would write that down, something like talk to the CEO or talk to the team or find out the answer to this question, or if the answer is this, don't invest, or I plan to invest, and then you go out and you look at it and get ready to take action on it. But hopefully by the time you finish this paper and you've done all your fundamental analysis, you have some sort of plan of action on what the next step is going to be, whether it's to go look for more information or to actually take the necessary step and go buy this coin. So I talk about and think about process a lot. When I believe that if you're going to get into this, cryptocurrency has a lot of value in raising capital. But some people are trading it to make money, like to actually pay their daily bills and stuff like that. And that's fine, but I want you to make sure that you create a goal and you know what your goal is, because as you go through this process and you have to make very quick decisions, if you don't have a goal in mind, your decisions are not going to be in alignment. They're just going to keep going off whatever your gut feeling is, and you're going to be sporadic and you're not going to move towards a final destination. So for me, I invest in cryptocurrency to raise a large amount of capital so that I can then go buy hotels. Because I'm in the real estate business and I believe that cash flow is king, and I know the real estate business well enough, but this is a huge opportunity. So for me, cryptocurrency is about raising the capital to go buy bigger pieces of real estate. But you guys don't have to adopt my strategy or my goal. think about what your goal is, and then create your strategy to reach that goal. After you've got your strategy and you know what you're going to reach for, you want to think about what is the opportunities in the market that actually get you there. Because there's a huge difference between buying coins to stake them and earn cash flow versus doing the research on microcap companies, investing it for a short period of time, and then flipping it for large amounts of capital and then just doing that over and over again. Those are two completely different styles of making money in cryptocurrency. They're both valid, but they need to be what's going to reach you. They need to be what's going to help you get to your goal. Once you have that idea, you need to test it. I'll wait for the plane. Once you have that idea of how you're going to make money in cryptocurrency, you should test it with whatever you can afford to, probably small if you're new, and then you should wait to see how it plays out. If you're going to buy a coin that you think is going to jump in value in a couple weeks, buy a few of them, but don't sink all of your capital and your money into it. Go out, test it, see what happens, see if you validated it, and then what happened? Did it make as much as you thought it was going to make? Did it happen when you thought it was going to happen? Because if it didn't, then you need to rethink your process. If something in your process is broken, it's not mixing up. Or was it just a black swan event? Was it just bad news from some sort of part of the market that you couldn't possibly have expected? But you should really take the time and think about, well, could you have? If you had done just a little bit more research, could you have known that that event was likely to occur? And if so, why wasn't that part of your process to begin with? So just always keep in mind that you want to constantly be improving the process and not just like, oh, I made money. Well, if everything made money in November and December, that doesn't mean that you really had a super strong process. It just means the market was really good in November and December. So try and look at what you did. Did it really do the things that you thought it would do when you thought it would do it? And if it works, improve it and just keep doing it. Another thing I want to suggest to you guys is find some thought leaders or find some other people doing something similar to what you're doing and go follow them. Whether it's on social media, WordPress, Twitter, YouTube, just go out and find them so that you can understand their process. More than what they're talking about, more than just what they think is a good buy. Try to find people who you can learn about their process. And I'm not recommending any of these, but these are just some of the ones that you can start with or that I started with. Okay? If you follow them and you start to understand their process, it opens up your mind onto how you can be evaluating these opportunities. Because we all have very different perspectives and different levels of knowledge. One of which that opened me up early on was Mike Novogratz. Mike Novogratz has a great video called I Can Hear the Herd Coming, or The Herd is Coming. And when he talked about that, he talked about all of the hedge funds that were being created in 2017 and all of the hedge fund money that was sitting on the sidelines ready to pour into this. And that video led me to go do more research on all the things that blockchain can disrupt and all the things that blockchain can do, and then go look at all the companies that are jumping on board with that. So I highly recommend you find this video. It's not hard to find. Mike Novogratz, Herd is Coming. You can also join our Discord group, which has a link directly to it. But if you find these awesome videos, by the way, I want you to share them with me. I don't just come here to just give presentations to you guys. I want more information. I want to know who else is really good to follow, what video is really impactful, because anything that helps me learn more helps me make more money in this industry. But while you're doing that, beware of shills, okay? If you go on YouTube and you type in ICO review, you are going to find a lot of shills. And a shill is somebody who is getting paid to give you information that is not accurate. That is not accurate. And I love this quote: if you are not paying for it, you are not the customer, you are the product being sold. Okay? you want to think about this person's alignment. If they're pumping out a bunch of videos every day, making ICO reviews, what is their alignment to you if you're not paying from it? Because by the way, you don't make much money on YouTube ads anymore. Okay? They're not in alignment with you. A lot of those people are getting paid $5,000 to $30,000 to make an ICO review video. Think about that. $5,000 to $30,000 for making an ICO review. That is a part of the ICO's marketing plan, is to get these influencers to make a video so that you go out and buy it without doing your research.
Can I just point something out here?
Sure.
You said that if you're not paying for it, then you're not the customer, you're the product. That's true, but sometimes even if you are paying for it, you're still the product. There are plenty of places where you can pay money for investment tips and advice, and it's not much better than free stuff.
Absolutely. So this person's name is not actually that important, but this is a person who runs a Facebook group. And in it he said, this ICO, and it doesn't matter which one, is an amazing project. And he goes on to talk about it more in his Facebook group. And then he links you to his article, which has only more positive things to say about it. And one of his commenters asked, are you in any capacity being paid? And he comes out and says, yes, but I don't think that matters. That is a huge conflict of interest. Okay? I'm telling you this because you're investors. You need to know that this exists. You need to know where the conflict of interest is and whether or not the information is still valid. So, again, I'm talking about things that I use, things that new people can use. When you buy a piece of property, you should know what you're going to do with that property before you buy it. And that might sound silly, but there are people with large chunks of money who just go out there and buy a property, and they haven't worked their steps backwards to know exactly what they're going to do when they're done done rehabbing the property. Okay? To me, that's crazy. It's very, very important to know your exit strategy before you buy an investment. Even if that exit strategy is to rent it as a landlord for the next 100 years. That is still part of your exit strategy. You would want to know who is going to manage that for you. Are you going to manage it? In the case of crypto, I have what I call sell the cover strategy, and some people call free rolling. If I buy it at $1 and it goes up to $2, that's a great opportunity where I could sell half. I still have a similar amount of value, but I get back all of my principal. No matter where you go and no matter what you invest in, I want you to think about these questions. What is your target ROI that you want to make from this? How long until you can get back your principal? Because principal is what I measure risk in. If I can get my principal back in a couple of weeks and let the rest of it go out and make money, my risk is virtually non-existent, except for time. Okay? Or you could say there's an opportunity cost. I hate to use that because opportunity cost is very hindsight, very 2020. But the reality is, if I can put my money into an investment and safely get my principal back out in a short amount of time, I'm totally happy with that investment because it can just keep rolling. And it might go up in value, and it might go down, but that's all profit. There's no actual loss because I've got my principal back out. So when I buy these coins, I'm thinking, when will I exit? And for me, it can be a time frame, but also an event date. Are they going to have some big news or some big product launch or something like that? Because I want to know when do I plan to sell, and I want to know when that event occurs. Because I've got some coins that I bought early on, and they just sort of trickle up in value, and then they trickle down in value, and they trickle up in value. I have no idea when to sell on those. And eventually I'll sell those just to get out of them and move to a more opportune opportunity. That was a weird phrase. But I'll move it to someplace else where I know what I'm going to do and where I'm going to exit. But I want you to think about that when you buy a coin. When do you plan to exit? How long before, or if that strategy doesn't work, if that event doesn't occur, how long do you give it before you just take your money out and move it someplace else? Some of these ICOs you can make fantastic returns, possibly 10x or 20x. I don't want you to go out running and buying a bunch of random ICOs because I told you you will make that. I'm saying some of them can. But there's also opportunities before that event even occurs to possibly sell and get your principal back out. So think about that. When are you going to do that, and how much are you going to sell? If it goes up double tomorrow, are you going to sell half? Are you going to sell a quarter? Are you going to sell 90% and hold back the 10% to go free roll? I use my level of confidence that I feel in the coin. I want the... See, basically what I do is I go and look for the best 5 investments, the best 5 or 10 coins every single month that I can get in on, that has a short time frame to flip, that has some big news event or some big product event, something that is going to cause the coin to spike in price. And when that event occurs, I'm going to exit at least partially. I'm going to sell a certain percentage. How big does it spike will probably determine that. But some of them, I'm going to sell 90%, and then I'm going to keep 10% in case it goes up for future value. For me, it's about finding the best opportunities to keep moving my money, to keep multiplying it. But you should come up with your strategy and your goals and figure out your exit strategy for that coin or that project. And then finally, if you do sell a portion or a majority, how long will you hold the rest? And you got to come up with that. I can't give you the answer to that one. Just by a show of hands, how many people invest but not in cryptocurrency yet? Or let me ask this question again. How many people invest in something? That was the majority of the crowd. That was probably 70 to 80%. At some point, you want to create a portfolio. If you're just starting out, I think you can just focus on one asset class, but eventually you want to branch out and look for more opportunities, or diversify yourself so that if something comes in and hits your asset class, you're not totally wrecked. So I should have kept it up there. I had my old portfolio that showed which types of coins I was in December, and I took it down because I wasn't going to use it for this talk, but now I wish it was in there. But I encourage all of you, no matter what you're investing in, to come up or to use this philosophy of having a slush fund. And a slush fund is a very small portion of your portfolio that you go and experiment and just do weird things with. And you may sound like that's like bad investing, but it's not. When you use that slush fund to go do things that other people are afraid of doing, you will find some very interesting information. For example, I did Airbnbs in Las Vegas, which has turned out to be a great investment. But had I listened to other people, older investors, more mature investors, had I just talked to other people at these RIAs, I never would have maybe tried that, because there was so much negativity on Airbnbs. And I know we're nomads, so most of us have used Airbnbs. But in the traditional real estate investing world, Airbnbs are still scary to a lot of people. Who are you letting in your house? You don't have background checks on them. They're going to trash the place. They're going to set fire to it. Yada, 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 yada. Well, I went and stayed in an Airbnb, found it was great. And what was really great is I got to talk to the host. I got to talk to the host and find out what his experience has been like for a host. And more importantly, the fact that he was covering his mortgage in one of the most expensive cities in America, Palo Alto. So that was pretty surprising to me. So by having that slush fund, I went out and I tried Airbnbs, and my return from that was phenomenal compared to my cost versus traditional real estate. In the U.S. market, traditional real estate, landlording a house, you should expect a net income of somewhere between 10 and 20%, depending upon how good you are doing it. And that's before sometimes management fees and sometimes after. But you can get that monthly on proper Airbnbs. Okay, it's a completely different income relationship, right? It's like a whole nother level of returns from the same type of properties. Now, I'm not saying you should go out and do Airbnbs, but if you do, let me know. I'll give you some tips and advice on it. But if I had never had a slush fund to just go try that, if I had never been experimenting with that, I would never have saw the 10x returns compared to traditional real estate. So at some point, you should do the same thing. You should create a small sliver of your portfolio, whatever you're comfortable with, and go try it in different types of crypto, or mining in crypto, or these microcaps, or these ICOs. You should try it in stocks, in real estate, in venture capital. Whenever you've reached a level, take a sliver of your portfolio and go do something that other people are afraid to do. If there's a lot of fear in it, it could be really bad, or it could be that they just are afraid of it and they haven't done the research and they're not doing it properly. Where other people are afraid to go is usually where there's a lot of opportunity. Use your slush fund for that. And then finally, I've said this before in the presentation, but cash flow is king. Right? Cash flow is what pays the bills. Cash flow is what raises your level of luxury. I'm not one of these guys who would ever go out and buy a Lambo with my crypto money and just tie up so much capital in a dead asset, what we call dead equity, right? But if I ever got my cash flow high enough, you can do that type of stuff and not be worried about it. So my goal, and it doesn't have to be yours, but I want you to think about this, use your capital gains to go buy cash flow. My goal is to go make a whole bunch of money in crypto for the next 3 years, then go buy the big assets that have big cash flow, like hotels, and then use that cash flow to improve my luxury of life and to give back. And it's a very simple statement. Retirement is not a pension plan, it's not a 401k, although those are some of the methods you can use to get there. Good luck to you. Retirement is when your expenses is less than or equal than your passive income. When you achieve that, you are effectively retired until you choose not to be. So there are some cash flow opportunities in crypto. You can set up these mining equipment and do proof of work. You can do that for Ethereum, for Bitcoin, and other things. And Monero, I believe. There's other things called proof of stake. For example, I wish I had known about this. I just didn't know about it at the time. But Dash is a Dash, no, Neo. Neo is proof of stake. It was $7 at one point, and if you had 1,000 of them, you could stake it and get 7 Neo per month. It is Dash, sorry. 10,000 coins. I thought it was 1,000. Yeah. So at one point, you could have bought Dash at $7, and if you bought 1,000 of them, you could have staked it, and then you would have gotten 7 Dash a month for free. That's really great because Dash now is like $800. So now it's a little hard to buy into, but they're getting close to $7,000 a month for what they put up $7,000 to start. So look for those types of opportunities, and if you find it, tell me. But there's also some other cash flow opportunities. There's airdrops. There was one that I was looking at, and it doesn't fit my strategy, but it was very tempting. And I forget which one it is, so I'm sorry. But they had airdrops going on for the next 6 months. And those airdrops would be, if you own some coins, they would send you some coins for free as long as it was in a wallet that wasn't an exchange. It had to be like one of their wallets. And they would do that every Monday. And I did the calculation on it, and if you just bought it today and held it and sold the airdrops every week, then in something like 8 weeks, you could pay back your initial principal. It might have been longer than that, and I'm going off of memory, and I apologize. But these opportunities do exist. Now that's a really good opportunity for somebody else. It just doesn't fit my my strategy right now. I'm putting as much capital I can into quicker flips. And so I expect to see bigger returns. But if I was coming straight from real estate and saw that, I'd be very tempted to take that. There's also opportunities. Now be careful with this word. There are websites where you can lend your coins to people. I don't recommend that you jump quickly on those. You have to be very careful. A lot of those sites are scams. But there are large exchanges where you can lend your coin to be used for margin trading. And you have to check out whether it's covered, how safe you are, etc. There's also Steam, where you can lend your Steam power, not your Steam, but your Steam power, and get paid for the Steam power. So look for those types of opportunities inside of for cash flow in crypto if that's what you're looking for. But also think about all the things that are not in crypto. Where can you, if you made a lot of money in crypto, where could you move that money to get the cash flow that you want? Just a basic chart, hierarchy of needs. When you're thinking about your investing, I think of it in this terms, like I want to get my cash flow to this level so that my basic needs are met. Eventually you want to make sure that you have your good career education. Then you get to retirement, and then you start looking at comfort, and then your legacy, your philanthropic ventures, what you give back to your family and friends, etc. And you should think about that in terms of where you are in that process. Are you on the bottom rung, the next rung, the next rung? And then how are you going to keep moving up through those? And that's it. I hope you guys had a great time. Thank you so much. You can join us here. It's also on the bottom of the page. Did I do okay? And I think there's another mic. Awesome. Does anybody have any questions?
Question here.
Since a lot of it was focused on ICOs, I'm wondering specifically for U.S. residents and maybe residents of China or other countries that are not allowed to participate in ICOs, or many of them. Where are you going, depending on where you're from, or where would you go if you were from a country like that to get into an ICO now that KYC is becoming much more robust than it used to be?
Sure. So, big disclaimer, I am not an attorney and I am not giving you legal advice. I'm just telling you what I've seen, okay? On some of these ICOs, I've seen that you can check the box and then go straight to donations. Now, why do they do that? CYA, cover your assets. They don't want to get sued. It's not about stopping you, it's about protecting themselves. So, if you wanted to do that, you could probably bypass that pretty easily. I'm not telling you you should, I'm just saying you probably can. Another opportunity, possibly, not legal advice, is you could possibly set up a company in a different jurisdiction and let the company invest on your behalf, or on its behalf, I should say. And then get a wife in another country. There's a few of them around here. All right, you had a question? Oh,
so as a complete noob, I'm looking for recommendations on a wallet, so then I can go and actually invest in something and just start the whole process.
Sure. So if you're just looking to get started and invest and trade, you can use pretty much any wallet. And I should say, so let me give, what type of advice should I be giving? First you go to GDAX or Coinbase, and that can kind of be a wallet, but it's not, all right? Then you want to move those coins either to another trade exchange that has the coins that you want, or to a personal wallet. Each coin that's really a coin, not a token, it should have its own wallet. Okay? You want to be careful, and I don't know how to give you or tell you which ones to go use because it's a security type thing. If I tell you which one to go use, I don't want to be blamed because I don't get any profit from telling you anyway. But you want to do some research, whether you go through Reddit, talk to people in the community, and find out the safest wallets. I'll tell you what I use, and you can just do your research from there. I use Exodus as a wallet because it holds multiple coins and has multiple addresses, so it's like a multi-wallet. But you can't use that for everything. It's only got, I think, 13 or 14. And you cannot put, and this is very important, you cannot put Ethereum tokens in there. So that is other coins and tokens that are based on the Ethereum network. For that, I use MetaMask. And I only move the tokens in and out of MetaMask. Because if it ever goes to Exodus, I have no idea how to get it off of there. I probably can, but I have no idea. So a lot of the coins and tokens will be what are called ERC20. It means ERC20 compliant. It really means it's based off of Ethereum and it runs on the Ethereum network. For that, you specifically need an Ethereum wallet. And I use MetaMask.
How do you spell that?
MetaMask, M-E-T-A-M-A-S-K. If you go to myetherwallet.com, they will have a list of suggested wallets, and it's like the second option.
Mask.
Yeah, like mask.
Right.
Mask, the type to cover your face, yeah.
Any other questions? Any more questions over here?
Feel free to ask general investing advice, coins. There's a question up there.
Yeah, do you have any suggestion on portfolio differentiation? How to differentiate the coins on your portfolio?
Was the question how to diversify your portfolio?
Yeah, better. Thank you.
Awesome. Just wanted to make sure I was answering the right question. So I wish, yeah, I don't have that slide on this one. I wish I kept the slide up there, but originally I was doing like 40% long-term coins, like Bitcoin, Ethereum, EOS, IOTA, XLM, anything that I was just bullish on holding for years, like I didn't care. And then I had a section that was more midterm, things that were already on, no, sorry, that's where the ICOs were. So something that was going to take 1, 2, 3, possibly 6 months to mature, but had a good possibility of making some money, I would put in my midterm category. And then I had another category for short term, and that's actually what I'm moving all of my portfolio to. Like 90% of my portfolio is now going to short term plays, which are not even ICOs, they're after the ICO phase. But that's because I have a certain strategy and certain things to look for that make me the largest amount of return, so that's why I'm moving towards that. And then a sliver of it was mining and proof of stake type stuff. I did that mostly as an experiment because I heard so much negative feedback on cloud mining that's terrible, so I quickly rushed over there and tried it. Because, again, slush fund, that's kind of what I do. When everyone else is super negative, I kind of try and filter through their comments. How deep are they thinking? How shallow are they thinking? Because that might be a good opportunity to go rush into. In terms of also I'll tell you what I'm doing in terms of safety. Because I'm doing these short-term strategies, I'm actually keeping a percentage of my portfolio in cash, depending upon my confidence level in the market. For example, this month we were supposed to have, and I don't know if it happened, SEC regulations come down in the US. Now, I'm actually bullish on those SEC regulations because I think the hedge funds are going to come in and they need those SEC regulations to be positive for that money to come in. And I believe that they are helping each other, so I don't think they were going to block each other. So I actually think that the price would go up from that event. But it doesn't, that's thought versus strategy. Like I can't outthink myself. I know that that is a potential shakeup in the market, so I took a chunk of my portfolio and put it into cash, both because I was doing the short-term strategy, but also because of that shakeup event. I don't want to have all my money in coins if there's this huge shakeup event. I want to make sure I can move some cash to buy some great deals if it shakes it up in a negative way. Well, it'd be negative for people holding coins. It'd be great if I was holding cash and the market tanked. So I hope that helps you.
Hey, so you've shown us how to analyze ICOs. What's it
All coins. All coins. I do this sheet. I want to make...
Okay. Post ICO and all kinds of... So what are some good ways to find ICOs to consider without being inside secret groups and stuff like that?
ICOs are public. They should be easy to
Is
find.
there a repository of ICOs that are coming up?
So there's several websites on my spreadsheet that I share at this link, but my favorite, I'll just tell you straight up, is ICO Drops. I can't remember now if it's Drop or Drops. ICOdrops.com. And I like that one because it's got pretty much, they all kind of have similar lists. They're almost the same. But I like theirs because a lot of the information I'm looking for is presented nice and neat there. So it helps me speed up the process.
Got kind of two questions. One is, what do you think is a good cash flow opportunity in the like 10 to 20K range? And the other question is, what do you think about Tether?
I'm going to answer the second question first. I think personally, this is my own, and I have not done a ton of research on this, okay? I think Tether has nothing behind it. I don't think there's any money in a vault somewhere. And I say that because what is the incentive for the person making the coin? I don't see how they make money. If they don't make money, how do I think it's true? I actually read an article, and I'm not saying this is true, I have no idea, that said that Bitfinex was hacked, and we know that is true. And they lost, I don't know how many millions of dollars worth of coins, and then soon after, they released Tether. Now, if Bitfinex is behind Tether, and they were hacked, and those timelines are like this, to me that's a huge red flag. So when I put up GDAX because that's what I use, I literally move to cash, I don't move to Tether. Interestingly enough, just on the hypothetical spectrum, if enough people believe in Tether and there's nothing backing it, but nobody knows that, it works, right? So for those of you who don't know, Tether is supposed to be tied to the value of cash. So they are supposed to theoretically make more to lower the price, and they are theoretically, I guess, supposed to delete and burn to raise the price whenever it doesn't match US dollar. Where are they burning and deleting it from? I don't understand that. I haven't done a ton of research because I don't use it anyway. I'm already not using it. If I was going to use it, I would want to know the answers to those questions. How do they add more to the market? Where are they keeping it? Because they say they're holding enough dollars to equal the coins or something. Where is that being located? Who's doing the auditing? It has to be a third party. So I want to know who the third party auditor is. And how did they delete coins if they're trying to raise the price to get it to match dollars? Where do those coins come from? Do they buy it back from the market? Do they delete their own shares? Do they rip them out of your wallet and delete it? I don't understand the mechanics for that, and until I do, I wouldn't buy any.
But can I point something out here?
Absolutely, jump in.
So, yeah, quick backing. Tether is a US dollar pegged cryptocurrency. which means that, at least in theory, if the price drops below $1, somebody goes onto the market and buys enough tether until the price goes back up again. And if the price goes up above $1, then they print more tether and use that to buy cryptocurrencies and hopefully turn them into cash or something along those lines until the price goes back down to $1. That's really all you need to know about it, because if the price starts going significantly above or below $1, something's wrong. And if it goes above $1, you can arbitrage it back down. If it goes below $1, you should start worrying, which you did in the last couple of days. Regarding its legitimacy, about 2 months ago, some representative from Bitfinex, which ostensibly has no ties to Tether but actually does, a representative from Bitfinex posted to Reddit that a lot of the money going into Tether is them going onto the open market and buying Tether, selling Tether if the price goes above $1, which is, you can see them happening if there's a Twitter address called Tether Printer. Every time they print more Tether, this script tweets out, another 100 million Tether came onto the market. And if you follow the market gyrations, the market price, go on CoinMarketCap, the Tether page, you can see the nice Tether price graph. When Tether goes above $1 for a significant period of time, that is usually followed by a large influx of new Tether onto the market as they print more to bring the price back down. Usually the price never goes significantly below $1. Except recently, in the last couple of days, now it's going back up. We don't really know what they do in that case. There was a third-party auditor up until a couple of days ago, where they severed ties, which made everybody sort of scratch their heads what's going on here. And the news of the auditor severing ties with Tether dropped the price of Tether significantly because everybody immediately assumed something shady was going on. But Tether didn't fail, which is a good sign. And the most effective auditing that there is for Tether is not actually Friedman LLP or KPMG or one of those companies. The most effective auditing for Tether is the wealthiest Tether shareholders. Conveniently, there's a Tether rich list. We can actually see who the wealthiest holders of Tether are by address. Those holders are all Bitcoin exchanges like BitBTC. Who use Tether in their daily operations. They tend to have gigantic stashes of Tether on hand for obvious reasons. The question, therefore, is these exchanges who have hundreds of millions of dollars of Tether exposure, are they getting some kind of privileged access to Tether, or would they just trust Tether blindly? These people have all themselves been hacked, mostly. They're all fairly paranoid. So logically, it's probably correct to assume that they have done some kind of their own proctological exam on the Tether operation and concluded something sound. So the real indicator to look for, if you're concerned about the solvency of Tether, is not people posting on Twitter, but on the behavior of exchanges. Are exchanges moving away from Tether? Because for exchanges, their risk exposure to Tether is not just the hundreds of millions of dollars of Tether that they have in the bank. Their risk exposure to Tether is the fact that their business is running on Tether. If you have an exchange that trades USDT denominated pairs like BitBTC, all of a sudden Tether goes down, that's a major hit to your business, far in excess of the Tether that you hold that just became worthless. That may threaten the very existence of your business. So what you really want to look for is, are exchanges moving away from Tether, because they're the ones who could plausibly ask for and get some kind of backdoor information of what's actually going on there. The reason Tether itself doesn't transmit to the public is because of some crazy banking scam. Basically, the US government and all the USD-denominated banks, which is in the banking system, really doesn't like Tether to exist at all, and they have a habit of shutting down any and all of Tether's banking relationships as soon as they hear about them. Which means that Tether has a very good reason to keep all this information very secret, because if anybody finds out about it, then chances are that will get cut off.
Interesting.
Thank you.
Thank you. And your first question was opportunities for less than 10,000 in cash flow in crypto. And I'm actually going to have to say I don't know.
Just like good cash flow opportunities.
Cash flow opportunities for 10,000? Airbnb. I mean, from my own personal experience, I'll answer the question like that. If I had only $10,000 to $20,000, I would go sublease an apartment in a good city, and I would talk to the owners. I would say, point blank, I run Airbnbs, or my partner runs Airbnbs, or my mentor runs Airbnbs. We want to rent this one, test it for 3 months, and if it goes well, we want to rent 4 more from you. Well, I mean, and inside of crypto, I don't know, because I'm not looking for cash flow opportunities inside crypto right now. But does anybody have a good answer for that? Does anybody focus on cash flow opportunities in crypto right now?
I would advise against restaurants. Not a good idea.
He just doesn't want the competition.
Still trying to figure out how I ended up in this situation.
All right, so any last questions? Anything to do with investment, cash flow, crypto?
You mentioned you experimented with cloud.
Cloud mining, yes I did. So far it's fine. However, they're usually 1 to 2 year contracts. So the 2 companies I use are Hashflare and Genesis Mining, because those 2 had the highest reputation in the industry that I could find. Again, that's Genesis. Okay, great question. So cloud mining, for those who don't know, it's when you pay for the service of somebody else using their equipment, but you get a portion based on how much you bought of what they mine. Okay, so it's like having a mining facility, but it's not you doing it. It's like having stock or something, but it's usually in a service contract. Genesis and Hashflare both have, I think, 1 year contracts now. You pay a certain amount of dollars and you get a certain amount of hash rate, and then whatever that hash rate is, they give back to you. So far, it's been profitable for me, but I bought, when did I buy? I think October, November is when I bought. And so you got to watch the prices, because if the Bitcoin price goes up, either the hash rate, the difficulty will go up as well, and so you won't be getting as much, or they also adjust their prices. Now, if I was to do it now, though, I would wait specifically for when Genesis or some company does a lifetime contract. They have those, and then they sell out very quickly. And the problem with that, the reason I didn't do it when it occurred, is that you had to wait like 3 months for it to come online. So you're basically helping them pre-buy their machines. They then use your money, buy the machines, install it in a facility, and then they start mining. So that's like a 3-month process to even start mining your stuff. But the good thing is it's then a lifetime contract. Now, lifetime actually means it probably won't be valuable after 5 years or something like that, because the difficulty rate, and they charge you electricity. That's very important to know. So if the difficulty rate gets high enough that their electricity is not profitable for what they're mining, they shut off your contract. It null and voids your contract until the difficulty rate or the electricity goes down. But in terms of cash flow, it's okay. It doesn't match anything like trading and stuff like that, so I wouldn't recommend it if you have the time to do trading, but if you have no time, it could be a great opportunity. On that note, there was recently an ICO, I think in December, called Hydro Coin, and it's sold out now, but that was an ICO specifically to build a mining facility that was next to a hydroelectric dam. And supposedly they're not going to do cloud services. You had to buy the coins at that time, and then that would get you the mining services. You basically, it'd be like just like shares of a company. You were basically buying equity in that company through the use of the coins. And so you could probably find some more ICOs like that, and that might be kind of a mixed strategy to get into mining. Any other questions? I have an accountant, and I hope they figure it out and do a good job.
Lies. So the mining, that's relatively easy, I guess. I mean, you said if you don't have the time, doing cloud mining is a good thing to do. Like, it doesn't require much thought or energy other than just the initial investment. Or
I don't want to recommend it. I mean, I did it for myself, and my results are okay. And in terms of like the difficulty, you sign up for the site, you pay them either with credit card or Bitcoin. You show how much, there's like a little slider. You pick how much hash rate you want, and then you buy it. There is another website that is something like miningcalculator.com or something like that. Just search Google mining calculator, and that will tell you how much your hash rate will generate today. Now, the thing about mining is it's kind of like futures trading. You're kind of buying, some of it's, you're kind of betting. You're kind of betting that the price will be the same or higher in the future. So the more bullish you are on a cryptocurrency, the more valuable mining is to you. But if you suspect that mining is going to go down in price, you should definitely not be mining it. Right? You should be mining something that you think is going to go up in price, and you're locking in the value today. And that's what I did. I bought it at well, now I'm not sure. It could be lower. But when Bitcoin was very high, my mining looks great because it's spitting out so many Bitcoins, Satoshis actually, and the price looks really great because I kind of bought at a lower price before. But yeah, in terms of not setting up the equipment yourself and not doing a ton of research on the market, mining is a place where you can keep shoveling money into and then get return over time. Any final questions? Well, thank you guys. Good night.